Hello, good evening, everyone. Good to see every one of you here. My name is Alex from MarketWise Asia. Thank you so much for being here and being on time today. Okay, so if you can hear me loud and clear, please say a hi to me in the comments or in the chat, either on YouTube or on Facebook as well. Either one, it is fine, just to make sure that the sound check, okay, and the screen, the image, everything is okay. If it is okay, just type yes in the comments. Okay, so say hi to me also. All right, I can see Alan, I can see Dave. Okay, I can see Forrest. Okay, I can see Tess. Okay, thank you so much. You can see that people are streaming in. Okay, so we have just concluded the Trading Carnival 2026. Okay, just last weekend Saturday at Suntec. Okay, if you were there, okay, if you were there, okay, can you just type me in the comments over there? How many of you here were there on Saturday? Okay, I think right now because still streaming in, but if you were there, okay, just type me in the comments. Okay, hello Dan. All right, so far, okay, we are actually into the February already, so which means that next week, after next week will be Chinese New Year already. Yeah, okay. Jonathan, I saw you second half of the event, then you came prior to that. I think you were at another event, right? Okay, Alan. Okay, Alan. Yeah, so thank you so much for supporting the event. So Alan, so if next time, okay, if you still attend our event, okay, do come and say hi to me. I might not be very available to speak for long, but I really want to see you. I mean, say a hi to me, right? So at least I know who you are in person. Okay. All right. Okay. Irfan, Tommy, Nordin. Okay. So also say hi to me. Okay. For those who are coming from our event next time. Okay. All right, Jason. Thank you so much. Okay. So let me just kickstart this session. Okay. Don't waste your time also. So I hope I can finish this presentation, this live stream within 1 hour or so. So as usual, a disclaimer first. Okay. Let me just share my screen right now. A very fast one over here. So let me see. Okay, fantastic. Can see, right? So as usual, a disclaimer first. Okay, whatever I share, okay, today it is just for entertainment. Okay, right? It's not a recommendation to tell you what to buy or what to sell. Okay, just for information only. Okay, so please do your own due diligence. Okay, and also the social media, okay, do follow us on the various social media channel over there. So this is the main one. Okay, all the social media channel, it is all here. I'll post the link in the comments. So if you want to, okay, you can also scan this QR code also. This is the one. You can see the QR code, right? Scan this QR code. So basically you are inside this link, you'll see this, okay, all the links, Facebook, Telegram, YouTube. So if you're watching this on YouTube, do subscribe to our channel. Okay, watching this on Facebook, do also like and subscribe and share our channel, our group as well. Okay, so let me just continue this. Okay, and before we kickstart, okay, just let you know what is the economic data for this coming week. So need this date over there. Just put the main one over there. Where is it? Calendar. Okay, so for this coming week, okay, in fact, yesterday the manufacturing PMI was out, so it's better than expected. Okay, and in fact, today don't have. Tomorrow, 4th of February, there's this non-farm employment change. Okay, this PMI as well, and then Thursday there's unemployment claim. Okay, and then Friday there is this consumer sentiment and inflation expectation. Okay, so before I continue once again, okay, the first part of the session, I will generally do a recap of what has happened on the macro side of things. And then the second half of the session, I will touch on the technicals, okay, maybe some trade ideas, okay, if there's time, etc. So before I continue again, okay, may I know what was the biggest event, okay, that happened last week? Can anyone tell me what was the biggest event that happened last week? Okay, can anyone tell me what was the biggest event that happened last week that caught, like everybody is talking about lah? Okay, can you just let me know in the comments? Okay, do entertain me a little bit. Okay, all right. Gold and silver drop. Yes. Okay. Thank you. How do I address you? Is it Irfan or I call you Nordin? Okay. Yeah. Mui Hua said silver and gold, silver plunge. Okay, so fantastic. Okay, so yeah, that was the main one. Okay, I hope, okay, it didn't catch anyone by surprise. Okay, in fact, for the past 2 weeks, in fact, last week live stream, I also mentioned that, you know, the gold and silver on the weekly time frame, okay, there is already a potential star reversal signal already. Can you guys remember, for those who watched last week live, okay, can remember, just type yes in the comments. If you are new to me, go and refer back to last week live stream. Okay, I talk about the index. Okay, I talk about the gold and silver. I said that don't chase. Okay, don't FOMO, don't chase, don't FOMO. It can continue to go higher, but the correction is anytime. Can remember, the correction is anytime. So that was what I meant by anytime. Okay, that was meant by anytime. So you can see over there, this was the gold plunge. So yeah, so the I mean that the star reversal, you know, somewhere around here lah. So you can see that the plunge was that. So it was anytime. Okay, so I mean that I think there's one person who asked me how effective it is. I said that I cannot tell you. I mean that based on historical data, not too bad lah. So this was exactly what happened. Anyway, I'm going to talk some on the gold and silver as well, plus the general macro update lah. So let me just continue this. Let me just share my screen right now. Okay, another one over there. Just give me a moment. I'm trying to share my screen. Okay, so that was the gold plunge, right? Okay, so let me just share my screen. Okay, so you guys can see, right? Okay. Okay, Joseph, now I'm sharing my screen already. Okay, so this is the one over there. Okay, so let me try to do it slower. Somehow I just cannot get the button all correctly for this coming week. Okay, all right. Okay, so the January correction. So let's have a recap of what actually happened. All right, so historic unwind. So in fact, I did a YouTube video on what exactly happened. Maybe I'll go through. How many of you watched that YouTube video? If you watched that YouTube video, okay, just type UT. But if not, I will go through with you again. So historic unwind. So gold, it was down 10%, the worst single day performance since 1983. So I was born in 1983. I'm 43 this year. Okay, so 1983. Okay. So silver down 27%, the worst day on record. Okay, down nearly to 30%. Okay, all right, and then Bitcoin continue to slide, but I think the everybody is focusing on the gold and silver lah. Okay, and of course, you know, some people are talking about this wash effect. So I by now you should know, but if you haven't known yet, okay. Trump actually nominated, okay, Kevin Walsh as the potential next federal chairman. So to take over Jerome Powell. So, you know, I mentioned already, President Trump nominated Kevin Walsh. Okay, he was a former Fed governor. So people are talking about, you know, how hawkish he is, or he more of a hawkish. Hawkish means that he like to, you know, tighten things. Okay, you know, yeah, tighten monetary policy. Okay, so not so dovish, so hawkish and dovish. So he is more of the hawkish side. So maybe I do this, okay, then you can see clearer. Is it this one? Not this one. This one. Okay. All right. So the reaction. So the dollar index actually rallied. Okay. Consequences. Okay. Stronger dollar immediately pressure all the USD price set. So I need to tell you this. Okay. So these are the reason what the media tell you. Oh, because Wash is a hawkish, then, you know, it led to a dollar index rally, that kind of thing. But if you actually realize, okay, the dollar index has actually been fallen for quite some time. So, you know, it is not surprisingly, okay, you know, it rallied. Okay? It's just at the right time, okay, the market rally. Because at the moment in time, I think there was also a star reversal signal on the dollar index also. So the market, the media is just trying to give you any freaking reason to tell you why certain asset classes go down or go up, etc. Okay, and of course, this the silver. Okay, people are very interested in silver, but just talking about fundamental. Okay, later I'll go through that. Okay, the YouTube video I mentioned about, okay, it is for the paper market. So there was some margin calls, the CME increase, the margin requirement, etc. So that lead to an extreme volatility. Okay, flush out the speculative block. Okay, but Yang, okay, good to see you. Okay, so the physical market. Okay, in case you're not aware, I think this is the 6th consecutive years. Okay, either fifth or sixth. Okay. Okay, this is a good question. Okay, Yongwi. Okay, I also asked the same thing. Okay, hawkish means probability of raising interest rate. Right? Okay, so if so, doesn't this go against Trump wishes to cut rate? So this is one part, but if I'm not mistaken, I go and Google. Okay, he seems to have so-called softened his stand, and not only that, I think he's also one of the so-called insiders with Trump. Also, I mean that together they are same gang, right? And not only that, okay, he is also very into AI. Okay, he's very into so-called increasing, okay, the productivity. Okay, all right, using AI, and he thinks that that could lower the inflation as well. Okay, so this, and there are a few various reasons, okay, that causes him that not to be so hawkish. But overall, he's hawkish. But I think the main thing is, okay, he is the so-called inside the gang with Trump. Okay, all right. Okay, again, I could be wrong, but this is what I found out. Okay, so again, this is the physical market structural deficit. So the supply has out demand outpace the so-called the silver miners, that basically the suppliers, what they can produce. So in the 5th or 6th consecutive years, and if you're not aware, okay, solar, okay, all the EV, and also consume nearly 30% of the global supply. So if you're talking about industrial use, of course, inclusive of the recent speculative, demand and such, okay, the demand is still there, okay, but the supply is not such. So, okay, by right, technically, it should not, flush out like this, okay. I mean that, this is just something that you need to be aware based on the fundamentals, okay. But of course, price action did otherwise, okay. All right. So talking about that, okay, rotation, okay, into this year, you can see that this year, not all sectors or industry are performing equally well over here, okay. So you can see, okay, so for the this year, I think material and energy, I think there's some changes. I mean, I think this is not the most updated when I first got it out, but it is there. You can see that, financial technology is not so well. The Magnificent Seven, it is not doing so well. Like previously when I mentioned last week, okay, the big caps are basically doing sideways. But you can see that, okay, the S&P January still higher, okay, in January, okay. Winner so far is energy and such. Loser, can see that the most recent one is Microsoft, plunged 10%, okay, on AI capex, capital expenditure fears lah. Okay, for the latest one, you can actually go to finviz.com over here, okay, and then you go to under the groups over here. Okay, and then you go to year-to-date performance. Okay, so I hope you can see over there. Yeah, material so far it is up 15%. Not surprisingly now, because of the gold miners, silver miners, and all this. Okay, it is up about 15%. Energy, it is up 11.66%. Industry is up 9.1%. You can see that the technology, okay, it is barely surviving there. It is close to flat. Okay, 0%. Financial is also not doing so well. So this is from the Finviz. Okay. So the week ahead, okay, I think just now I mentioned already. So we have this so-called the PMI and ISM, manufacturing and services. This is wrong. This is wrong. Okay, should be, I think, not yet. Okay, on the 4th as well. Okay, so this is basically the what is ahead of you. And I also mentioned this in the YouTube video. So you actually go to YouTube and you search for the you can see this live here. Okay, market-wise Asia over there. The most recent video, not the live one, I also talk about the smart money exiting before it crashed. That was the one, if you haven't watched it. So this was the one here. Yeah, the great silver crash. What exactly happened? So if you haven't watched it, I suggest that you can watch it, but I will just do a very quick, okay, presentation again. Okay, all right, and just to show you once again over there. So this is the deleveraging. Okay, how many of you actually watch this wait, let me get up. Okay. How many of you actually watch this video? Just type yes in the comments. Or if you haven't watched this, okay, just type no in the comments also. That's fine as well. Okay. Anybody watch this video already? I talk about what happened to actually gold and silver. So maybe I just do another recap again. Okay, for example, Dan say no. Now they say no. Okay, so go back to the YouTube video. Okay, and do subscribe to MarketWise Asia YouTube channel. So that next time I got video, you know. So this is actually happened on the January 30th. Okay, when the paper rule broke the market lah. Okay, so on Friday itself, 30th of January, silver closed close to 30%, minus 28%. Okay, all right. I knew I explained now, like I've explained now very fast. Okay, so I mentioned the fundamentals didn't break. Okay, so gold, silver, especially silver, it is in a deficit. Okay, supply deficit as well. Okay, so it is a failure of the paper market. Okay, not the metal itself. So the metal, the physical metal, it is still there. The supply is still there. The demand, it is still there as well. So of course, people talk about the Fed chairman, okay, well, because of him or hawkish and all this, okay, it causes the gold to plunge, the silver to plunge. I think the reason is not that the media is trying to use whatever reason to actually find to explain because they need to release the news fast. Okay, they need to release the news fast. So whatever reason they can get, okay, convenient for them, okay, they'll just release it. Okay, all right. So but in fact, okay, there's some rules change, okay, in the Chicago Mercantile Exchange, the CME Futures Exchange, where all the commodities they are trading on. So the CME actually shifted the margin, okay, from a fixed dollar to percentage base. So previously, maybe they just need 10K, okay, to have a position. Now, as long as the prices of gold and silver, okay, keep going higher, okay, all right, it's percentage based, my friend. If percentage based, which means that if silver price and gold prices keep going higher, okay, they need to fork out more money to keep the position open, right? So the margin actually required as long as the price of silver and gold keep going higher. So of course, within the last week, okay, it keep skyrocketing, okay, keep going higher and higher. Then, okay, these are traders, okay, the institution, they need to fork out more margin, so which means, okay, the leverage was effectively capped. Okay, prior to that, it was a fixed one, so they have some leverage. But as long as price keep going higher, they need to keep forking out more and more and more and more money. Okay, so that leads to their 9 days, there are 5 hikes. Okay, so within the past 9 days, there are 5 margin hike. So which means that, okay, very small pullback, okay, can lead to margin calls. You get what I'm trying to say? All right, so this lead to 2 choices for those leverage traders, okay, especially those are going long. Okay, either, okay, they keep putting in new capital, okay, which some of them might not have extra fund to do so. Okay, if they do not post in new capital to keep the margin requirement, then they have to liquidate, okay, their current, because CME already explicitly stated, okay, I think up to close to 9%. So as long as the price kept increasing, okay, you have to, based on the percentage, okay, you fork out the margin. So go to $5,000 more margin, go to $120 ounce, okay, for the silver, you have to post more margin. So either that they liquidate or they put more new capital. Okay, and not only that, okay, China got some issue as well. Okay, all right, so there were actually some price anomaly. So for the China market, right, the main trading vehicle for the silver was actually this SDIC silver futures fund. Okay, it was trading at about 30 to 60% premium, okay, meaning that above the prices of the standard silver price. Okay, there's an anomaly. Okay, all right, and because of that, okay, and then the Shenzhen exchange, okay, imposed some emergency trading halt, which means that, okay, for the whole day, okay, those traders, okay, that's residing in China or whatever it is, they're using the Shenzhen exchange, okay, to trade. Okay, they cannot trade anything. Okay, their exposure, okay, the liquidity was stopped. Okay, nobody can trade anything, and because, okay, of that, okay, they are being due to have some forced liquidation because they are unable to sell locally So these Chinese traders, institution, or even retail trader, okay, have to raise cash somewhere else. For example, they can go to this SLB, which is the silver US ETF. Okay, they dump the ETF, or they sell the commodities futures directly, or they can trade OTC, over the counter, or they can hedge offshore, which nobody knows. So that causes the liquidation. And because of the repeated margin hike, and also the China they stop the exchange trading, the liquidity trap, that caused at night, the cascading so-called margin liquidation across the Western market. And then, the price fell like 30% for silver, 10% for gold, So this is the timeline of the crash. So since January 13, so the rules change, from a fixed margin to a fixed percentage, So which means that as long as price of gold and silver keeps going higher, they have to fork out more and more money to keep their margin, which means the maintenance margin. And from there onwards, there were 5 margin hikes in 9 days. And then on the last day itself, on the 30th January itself, the China hot trading, and then there's a global dump, in the US market at night. So which means that, the leverage died, because of that, a lot of people died, especially those on doing leverage trading. So the silver is there, but the paper bets are already gone, All right, so do you understand what I'm trying to say on this? What happened? Basically this is what happened to the gold and silver on the 30th of January. If you understand what I'm trying to say, just type yes in the comments, Now it's more of the interesting part already, more of the technical part. I think it's more interesting, So if you understand what I'm trying to say, just type yes, in the chat. Entertain me a little bit, engage with me. I'm just inside this room talking to myself, All right. So how, I think that, I think prior to that, I mentioned to my SVI members as well, say that, sometimes the best time to buy is when you don't feel like buying, and the best time to sell is when you don't feel like selling, Sometimes it's very hard to sell when price keep going higher, Let me ask you this question over here, So you can see from the chart, this is the gold futures, So, wow, very strong, right? Price keep going high, go higher, bump, that kind of thing, At this point in time, like parabolic. I mean that if you are holding gold or silver, or whether you are trading short-term or long-term, most likely you won't sell, Only those very experienced investor or traders, they will sell, selling into strength. But, most of the time you think that, price will go higher, I don't feel like selling. What if price continue to go higher? Then I'll leave a lot of money on the table, that kind of thing. But most of the time, you won't be able to catch the extreme top over there. Who can, Nobody is God, 99.9% or 99.99% of the time, when you sell already, there's a good chance that price continue to go higher. Then say, then they get, I shouldn't have sold, Price kept going higher, All right. And 99.99% of time, if you didn't sell, after market so off, then you say that, I should have sold earlier, The kind of thing, right or not? How many of you experienced that before, Nobody can time the market. So there's no best time to sell, There's no best time to sell. You agree with what I'm trying to say? Anyway, right now I'm going to ask you this question, So right now, this is the aftermath already. So people asking me, can buy or not, can buy or not, is it the best time? To be really honest, if you're asking me in terms of years, 2 years down the road, 3 years down the road, 10 years down the road, how will go fair? Can it go continue to break higher? Possible. It is possible. It is possible. It is possible. Can go to 6K, 7K, 10K, that kind of thing. But I'm talking to you in terms of a trading perspective. Before I continue, let me sure you understand first. In terms of a trading perspective, holding for a few days or to a few weeks, that kind of thing. So which means that shorter term, few days to a few weeks. Is everybody clear so far? Clear so far? Then type letter C. Letter C. Right. What I'm sharing with you here, it is talking of what could possibly happen in the short term, few days to few weeks, that kind of thing. Clear? Don't say Alex say, oh, I can go down. Alex say can go up. I didn't say that. So clear. Okay. So anyone can remember when was the previous gold crash? Gold and silver crash? Okay. So I go to a naked chart first. Anyone can remember when was the previous one? Gold and silver crash. Okay. Okay, I won't tease you lah. Okay. Okay. It is in 2011. Okay. More than 15 years ago. I'm not sure how many of you are trading gold and silver at that point in time, 2011. Now it's only 2020. Okay. Okay, I was inside that mania also in 2011. So, and that was the time. 2011 was also the very first year, okay, I started to dip into the financial market. Yeah, I'm still a newbie, know nothing. I see people, oh, I trade gold, or gold very good. I also go and buy that kind of thing. I also went to UOB or Rappers and go and buy silver coin. That kind of thing. Okay, anyway, not important. Okay, so now we are back in 2011. This is 2011 already, 2011. So you can see over there, okay, price action almost the same. Okay, gold didn't do much for some time, then suddenly go higher. Okay, and then okay, they go higher, that kind of thing, parabolic. So okay, so now right now, okay, let's zoom in to here. This is the part that I want you to zoom in here. Okay, this is the part I want you to zoom in. Okay, right, based on what you can see here. Okay, typically what happened aftermath after the sell-off? Just one glance up, typically after, okay, right. Okay, I don't know whether the 2026 crash will be a generational high, okay, or it can go higher. I don't know. Okay, I don't know. But prior to that, okay, 2011, okay, that was actually the high. Really, that was actually the high. Okay, I'm not saying that this year price cannot go higher. Okay, price cannot go higher. Okay, all right. So you can see that the main sell-off is actually here. Okay, the main sell-off, it is actually here. See, short-term wise, typically, okay, based on the past crash, okay, price tends to go higher. There was a technical rebound over here. Okay, it go higher, okay, and then it trap, okay, investors and traders. Oh no, this is a pullback. Price could go higher again, and then after that, price just go down all the way. Okay, and then there is another rebound, go higher and then go down. Okay, and then go down all the way, and then go down all the way. Okay, and then go down all the way. Okay, 2013, there's another crash. We can go down all the way. You can see that it's go down all the way. Go down. It dropped to nearly 50%. I'm not saying that this time around it's going to drop to 50%. I'm just telling you that previously this was what actually happened. So back to the short-term wise, the key thing is, okay, all right, what I found is that, okay, typically, okay, after a sharp sell-off, price tends to rebound over there. Clear? So let's go back to silver once again. Okay, go back to silver once again. Silver, okay, is it the same thing happened in silver in 2011? Let's go back to the previous crash in 2011. I have to keep scrolling back. See, 2011, see exactly the same price action. Wow, doing nothing for a while, then wow, get people excited, boom, okay, pull back again, people need a long pull back, okay, then boom, parabolic again. See, is it the same thing? Same thing, right? Okay. At that point in time, people were also queuing up, go and UOB and go and buy all the silver. Once again, I just want to let you know, okay, after it do a crash, okay, a deep sell-off, typically, okay, what happened? Once again, I'm going to show you, okay, typically it tends to go higher, okay, there's some technical rebound, right? Okay, all right, so yeah, so what I'm trying to tell you is that there's a good chance that, okay, there could be a technical rebound, which is actually happening right now in gold, right? It is doing a rebound right now. Okay. JAG is asking me, okay, how do we know we are at the highest top now though? Nobody knows, okay? Jack, nobody knows. Nobody knows that we are at the highest top right now. So it depends on your conviction. It depends on your conviction. Okay, I mean that to me, this kind of conviction is a religion. It is just like you tell some people who hold Bitcoin, HODL, HODLer, or some gold bug, silver bug. Okay, they think, because of the US devaluation of the dollars, etc., that kind of thing. They will like they're very high conviction. Okay, but for me, okay, I am a trader myself, so I usually don't hold this kind of thing. Okay, I mean I don't hold for long term. So nobody knows whether it can go in future go higher. Possibly it can okay, only like Forrest say only God knows. But short term wise, okay, a good chance that there is a technical rebound which is happening right now, which I told my SVI members, okay, not to go and short the gold and silver. Okay, I say that you can choose not to buy, but you don't go and short it. Okay, and okay, I just want to share with you also. Okay, all right, so this was actually the options flow, okay, which I mentioned in my SVI members. Okay, this is something that I don't think anyone in Singapore trainers are doing that. Okay, so okay, I'm not sure whether you can see, should be able to see that, because I cannot increase the size of the fonts for Telegram. Okay, so based on February the 2nd, okay, gold ETF weekly flow, okay, because 30th was the very big plunge. Okay, so looking at the options flow on 30th is actually good enough for me. But usually I look for 2 weeks of options flow. Why options flow? Because this is, I think, okay, this is where the smart money is. Okay, all the big sharks are using options, okay, to trade very big position to hide their intention as well, instead of just trading directly, okay, into the gold and silver market, or even other asset classes as well. Okay, so you can see that there was a very net positive premium, net delta meaning that the directional, whether it is bullish or bearish. Positive means bullish, negative means bearish. So you can see that 0 to 9 DTE, days to expiration, it is positive. 10 to 60 days, it is positive. And you can see that the top prints, the cluster, February 20th, February 27th, it seems that they are pretty much bullish as well. So I'm looking at the near term. So I'm basically concentrating on the 0 to 60 days, basically the near term. Okay, a few days to at least 3 months, that kind of thing. So you can see that the quick read, okay, despite the severe 10% plunge, the institution seems to be a massive buy the deep flow, that kind of thing. Okay, all right. And silver, it is the same as well. So it is contrarian bullish. Okay, net premium about 60 million premium. Okay, delta imbalance also positive. Okay, you can see that the 0 to 9 DTE is positive. 10 to 60 days, it is actually positive as well. You can see that even the February 20, June 18 seems to be quite okay as well. So despite the plunge, okay, options flow, it is actually net positive. So that's the reason why, okay, I told my members, okay, don't go and short. I don't know if I can find the message or not. Is it chat there? Okay. Yeah, over there. You can see that February the 1st over there, okay, options flow were actually very bullish. So it could rebound. So it could rebound in the coming days. Okay. So my view is that don't go and short the matter next week, which is exactly right now. Okay, all right. So in fact, okay, I also want to reiterate now. So in fact, the latest video that I mentioned here, the exit signal here, okay,
stop talking, insert.
Okay, so I talk about tracking the smart money exit before it crash. So there are people asking, you talk so much, do you trade or not? Okay, doesn't matter lah, because this comment is like, whether I answer yes or no, he also won't be happy one, so it doesn't matter. But what I'm trying to share is that actually, 2 weeks ago, options flow market has already shown that there is some cracks already. Okay, I'm not trying to tell you how good I am or whatsoever. I'm not. I didn't even really tell you whether I trade or not. Okay, so the key thing is, okay, how you can use this information, or how I use this information. Okay, all right. So options flow, if you see actually this GLD, okay, this is 25th. 25th. Can see that I posted this on the 25th of January. Okay, all right. Gold ETF. Okay, from the past 2 weeks, 12th of January to 23rd of January, aggressively bearish pivot. Okay, all right. So I mentioned in hindsight, okay, then I realized, hey, this is actually quite accurate. Okay, you see this over here. Okay, 126 million million bullish at 455 strike. Heavy call buying. Okay, 0 to 9 DTE suggests some traders are positioning for a melt up or short squeeze hedge. Okay, are you guys able to understand what it is trying to say? Okay, if you understand, okay, just type yes. If you don't understand, okay, just type no in the comments. Okay, just type no in the comments. Okay, so what it is trying to tell is that, okay, in fact, based on the options flow 2 weeks last week, okay, there were some traders very bullish, okay, on gold. They were thinking that gold can like do a parabolic rally, heavy call buying, or what you call a melt up. So let's go back to this date again. January 25th, January 25th over there, January 25th over there. Okay, January 25th, it is 25th. Gold, okay, over here. Okay, no, I should use the GLD. Sorry, I should use the GLD. Okay, yeah, okay, 455. Because I'm analyzing the GLD ETF. Can you see that? 25th, 26th. Okay. All right. I repeat again. Heavy call buying. Heavy call buying means that they're expecting price to go higher. Okay. Heavy call buying. And the 0 to 9 DTE means that it is a 0 to 9 days of expiration. So which means that they are expecting that the price of gold will shoot up in just very short period of time within the next 9 days or so. Okay, melt up, you all know lah. Melt down, you all know, right? Melt up is the opposite. Melt up means that, rally. So after that, what price really rally, that boom, that kind of thing. Okay, until it crashed lah. So, but overall, okay, overall it is actually net premium is negative, net delta is actually negative already. So, what I'm trying to say that, okay, for the past 2 weeks, I've been telling my members not to actually go and massively go and buy gold if you are trading short term. Okay, of course, if you are long term, buying now or buying 3 months later doesn't matter lah. But if you are holding time frame is a few days to a few weeks, that kind of thing, okay, then you need to be careful. Okay, can those who are inside SVI Alpha group, okay, type yes in the comments if you are aware of what I've been trying to tell you, or even SVI. In the weekly videos, I've been telling you that already. Okay, I've been telling you that already. So you need to be a little bit careful on that. Okay, so just let me know. Just let those who are not SCI know. Okay, this is like not say in hindsight one. I already said that already. Okay, so it is okay. It is okay not to make a lot of money. Okay. But the important thing is I don't want to lose a lot of money. So like I mentioned, this kind of plunge, it is very hard to get out. Okay, by the time it plunge, it is down like 30% already. Okay, it is down 30% already. Okay, so let me ask you. Okay, so I want to find something that is more repeatable, that is easily tradable, and that can repeat week in, week out. Okay, week in, week out. So let me share a bit example over there. Okay, let me share a bit example over there. So this is also one of the trade ideas. Okay, let me share with you. Okay, like for example, like all these gold, silver, or Bitcoin. I mean that if it rallies, okay, parabolic, good. It is good if you're inside. You catch it. Okay, you take some good profit. It is fine. But can you repeat this every single week or not? Like every week is a Sunday, every week up 100%, up 200% kind of thing. Not every single week, right? Okay, and this kind of thing, it is quite, to me, it's like you need luck, okay? You happen to buy gold, you happen to buy silver, that kind of thing, and then you hold for many years, that happen to pump, then you exit, kind of thing. So sometimes you need to wait for a long time. Sometimes you just nothing happens. So this a lot of luck is involved. Happen at the right place at the right time. Okay, so okay. What I usually do is that I want a repeatable one. So for example, okay, of course I'm SDI founder. I'm a founder of Seasonal Fund. Let me just share with you, okay, typically how I do something that's repeatable week in, week out. So for example, I'll look at the data over there. Okay, so look at the data over there. So for example, okay, for this week, okay, I already filtered already. What are the some of things that is that second this week, okay, second until the second to sixth. So I already filtered already. Second to sixth, okay, I don't mind sharing because basically there's only one thing only. Okay, there's only one thing. So the bearish ETF, because I'm not so bullish on the equities side of things. So I'm thinking, is there anything to trade? Okay, on ETF side of thing. So I look at my seasonal data over there. Okay, it can be a data sheet or a web-based data. So what can you see from here? I mean, what can you see from here? Let me try to just zoom in a little bit. Okay, what can you see from here? What are all the things that's listed here? Can somebody let me know? At one glance, what is it all about? What is it all about? Nobody answered me. Just one glance. What is it all about? Yeah, it's all bonds, right? Bonds, right? Bonds, right? Bonds, right? Bonds, right? So I have an idea or infer that, hey, actually bonds are actually weak. Bonds are actually weak, okay? Of course, you know, the TLT here, it is not listed there, but the IEI, okay, it is quite commonly no ETF also, the 3 to 7 years, okay? But the 20 years one, it is actually TLT, okay? The 20 year plus is actually TLT, okay? So you can see that bonds are actually weak over there, okay? All right, so plus look at the options, not options. I mean that in the group, I have this seasonal trend. I don't mind sharing with you. I mean, this one, I mean, you can catch it, okay? But most of the time, after what, you will forget one people. Okay? You can see that for bonds, right now, this is right, okay? We are in the midst of based on historical data, it is actually weak as well. So yeah, it is in line. It is in line as well. So it is in line as well. So okay. I know that it is weak. Okay, bonds is weak. Okay, all right. So it is weak. Okay. So I have this bot screener over there. So all already put inside my screener. So this is automated. It can actually push out the screen to me. Anything that's pushed to me. Okay. Let me just try to search. Okay, let me try to search. IEI, is it there? IEI. Okay, IEI, it is there. Okay, so it pushed to me, hey, IEI, oh, there is a trigger over there. Okay, bearish. Okay, there's a bearish trigger. iShares 3 to 7 years treasury bonds. Oh, okay, IEI is there. But typically, I don't like to trade IEI. I prefer to trade TLT. I prefer to trade TLT. Okay, I prefer to trade TLT. Okay, so you can see that, you know, based on the usual one that I put the cloud and all this. Okay, yeah, so I actually, you know, yesterday when the market opened, okay, I actually shorted the TLT lah. Okay, so there's some profit right now. Okay, not a lot, but okay, decent enough. Okay, all right. And okay, looking at the alpha board, I look at the options flow over there. Again, I'm not saying I'm going to be right. Okay, I'm not saying that I'm going to be right. I could be wrong. Okay, so you can see that the flow over there. Okay, the options flow. All right, so I usually do give out the asset classes options flow for the past 2 weeks, the latest 2 weeks. Okay, so for example, TLT. Okay, TLT, it is there, the latest one, 2nd of Feb. TLT treasury bonds, okay, bearish shift, momentum flip from a long-term week 1 to a call selling in week 2, etc. So premium overall, can see that the shorter term one here, it is actually negative. So you can see that, you know, also there's a good chance that maybe short-term wise, okay, the options flow for bonds is not so good, okay, then it is there. So, you know, this is how I do my analysis week in, week out. So I combine a few things, okay, but how I actually screen, it is actually using this over there, this board over there. So for example, what is there? Is there anything for me to trade tonight if I'm bearish or bullish? Okay, so let's say if you are bullish, okay, I can just grab the bullish all data over there, okay. All right, then it is all that. Today gold is out again. Invesco, aerospace and defense. But again, please, this is not to tell to enter. We still need to actually go in and take a look at the price action. So please don't say that, Alex, oh, flash out this is a buy signal. No, okay. This is just a screener. It tells you that what are some of the stocks that passes the criteria. You still need to go in and take a look. Okay. So this is basically how I trade lah. I mean that, you know, something that is repeatable week in, week out. Okay, you know, after this week is gone, next week there will be another week. There will be another set of watch list of stocks or ETF for me to check. Okay, all right. So if you don't like the database, the data sheet, okay, I also do have the where is it? Is it the web base? Yeah, I do have the web base as well. You can see that, you know, you can just search very easily, that kind of thing. Okay, you can just search as well. Okay, all right. So any questions so far? Any questions so far? So back to this is the bonds. Okay, for the now. Okay, now okay, good. Okay, the thing is coming down. Okay, so do you guys remember what I mentioned about the indices? So now back to indices. I jump here and there. Okay, index I mentioned last week there. Okay, based on the monthly time frame, okay, based on the monthly time frame. Okay, naked chart. Okay, based on the monthly time frame. Okay, there is a potential star reversal signal. Okay, all right. So like I mentioned all the indices. Okay, where be IWM, Nasdaq QQQ, small cap IWM, or even the equal weight RSP. Okay, or equal weight QQQ. All are showing potential star reversal signal on a higher time frame, on a monthly time frame. So I am not so interested to go long in the equities market. Okay, I rather be patient. I rather not be so anxious to go and trade and make money. Okay, than to keep losing money. You get what I'm trying to say? So I'm not so eager to go long in the in the equities market right now. Do you guys remember what I said last week or not? Can remember just type yes. I think I said that since last week. This week I say again. Okay. All right. So for the past 1 week, I said that there is a potential star reversal signal. Once again, the potential star reversal signal doesn't mean that it is going to crash or do a big drop or a shadow drop. So it doesn't tells you the magnitude. So price can do nothing. Can just range bound or shadow pullback or steep pullback. I don't know. But it just tells me that, okay, I need to be careful. Okay, it is a little bit overextended in the indices. Okay, overly extended. Okay, in indices, I need to be careful. Okay, don't be so aggressively going long. So I say that already. So moving forward, okay, this month it is January, and not January. This month is February. So I will be careful also. I won't be so eager to go long as well. So if you add in the CPR, okay, all right, can see that, you know, right now we are still above the central pivot range over there. Okay, so price action. Okay, if price really does break below this, okay, then you need to be careful really. Price action. And in fact, for the options flow, okay, I don't mind sharing with you. Okay, I mean that I don't share every single week. I only share to my members. Okay, the options flow for the indices, it is actually also not so positive. For the IWM, okay, tactical bearishness in the short term. So short term 0 to 9, it is the options flow is actually not very bullish. Okay, QQQ is still neutral. The only one anomaly is SPY. Okay, it is still quite okay, but all in all, it is actually there's a reversion risk. Okay, the upside might be capped for the small cap, and QQQ might be choppish. Okay, all right, this is what I mentioned. So these are based on options flow information. So which means that, okay, I have another perspective really. Not only I do have the perspective of a price action perspective, I have the perspective of the options flow, what the smart money are doing. But again, it doesn't mean that it is always to be right. Okay, they could be wrong as well, but it does give me another perspective. So which means that I will be more careful on the indices. Be more careful on the indices. Okay, clear? All right. And okay, how many of you want another trade ideas for this coming week? I will share with you. But again, it doesn't mean that, you know, it is going to turn out to be right, but based on historical data. Okay, all right. If you want, okay, just type me in the comments. Something for you to take a look. Okay, this is based on the seasonal data. This is based on the seasonal data over there. Okay, this is based on the seasonal data over there. Okay, once again, it doesn't mean that I'm asking you to buy. What I'm sharing with you is based on historical, factual data. This is based on factual data over there. Okay, let me share with you this. Okay, let me share with you this over there. Okay, let me share with you this. Disclaimer, just right below disclaimer. Okay, the crude oil futures, or what we call the CL. Okay, all right, Brent oil or crude oil also can. Okay, starting from the 6th of February, okay, to the 20th of February, okay, for the past 10 years, 90% of the time it went up. So which means that of the past 10 years, 9 years it went up for crude oil, okay? So this is something that you can be mindful of, just to take note, okay? So if you take a look at crude oil, seasonal data over there. Where is it? Okay, seasonal data for crude oil. You can see that, I removed that. For crude oil, you can see that, okay? From crude oil, typically after February, it tends to go higher into March as well, okay? So this is crude oil, this is based on seasonal data, but again, it doesn't mean it's going to be correct. All right, so let's take a look at the price action first. So if you take a look at crude oil over there, this is actually CL. This is the futures over there, okay? So you can see that it has been going down for the past few months last year, okay? Until recently, last month, price broke above the CPR level. And this month, it is supported at the CPR level as well, okay? If you look at the spot oil, it is the same as well, okay? So possibly, okay, price could go higher, okay? And something that I want to share also, okay, if crude oil does go higher in the weeks to come, and you can see already that the precious metal, all this is already going higher, okay? I think that, okay, there is a possibility that the inflation this year may creep up again. Inflation this year may creep up again, okay? Can you just type I in the comments over there if you know what I'm talking about? So you first heard it from me, okay? At least from Singapore trainers or educator, okay? I don't think anyone is talking about inflation yet. I got these ideas from Larry Williams, okay? Larry Williams, okay, based on his cycle analysis, okay? This year, maybe towards the middle of the year, there could be inflation coming back again. There could be inflation coming back again. I repeat, there could be inflation coming back again. Okay, so if that is the case, okay, then the equities market, okay, might be heading for some choppiness, or the equities market might not like this news so well. And okay, the Fed will not like that inflation is going to creep higher, which means that, okay, they won't reduce the interest rate as fast as Trump would like to be. Okay, and if you realize, okay, if you take a look at the 5 years break-even inflation rate, okay, this is the 5-year break-even inflation rate over there, okay, all right, you can see that recently, it is actually surging higher. It's surging higher. Typically, okay, this 5-year break-even inflation rate, which is the expectation of the inflation rate in the future, okay, 5 years, okay, 5 years down the road, okay, typically it lead the CPI. I repeat, okay, this 5 years BE inflation rate, typically it lead the CPI. So which means that, okay, if this one right now it's still okay. Right now it is still okay. Right now it's still okay. So if it continue to go higher, okay, eventually the CPI will have to go up as well, just like previously, okay, in 2022. Can you see that? No, it goes higher. So it lead the CPI as well. So okay, so possibly, okay, inflation rate might go higher in the months to come, but slowly. But I don't think it will be as severe as 2022 lah. Okay, as 2022. Okay. All right, everything clear so far? Everything clear so far? Any question? Do you enjoy my sharing session today? So if you enjoy, okay, my sharing session today, okay, please give me a like, share, and comments. If you're watching this on YouTube, okay, do subscribe to our YouTube channel. Okay, if I post any video there, you will know. If you haven't followed us on Facebook, okay, do also like and follow us on Facebook as well. Okay, so we are into the 1 hour mark. Any question? Okay, I give you guys 1 minute to ask some question out there. So all in all, to put things as a recap over there, okay, for the equities market, okay, equities market, I will be in a defensive mode, okay. For the gold and precious metal, short term wise, okay, I repeat, short term wise, okay, within a few days to a few weeks, okay, price might have a rebound, but long term wise, I don't know, okay, long term wise, I don't know, okay. All right, and for the ETF to buy, it is actually USO, okay, USO, okay. NG Ing is asking how to assess the CPR charting. I'm not sure whether it is still applicable or not, okay. You go to YouTube, right? You go to YouTube, okay. Go to YouTube, okay. You search MarketWise Asia, okay, and type CPR, okay. And you will see here, I put here how to set up the cloud pivot point and CPR on TradingView, okay. It is there, all right, okay. And then for crude oil wise, right? Okay, I think in the next 1 or 2 weeks or so, there could be some upside. Again, this is just my opinion based on historical data, factual data. So please don't come and tell me, say, Alex, say, buy. For the past 10 years, it is up, correct? No wrong. But whether this year you go up or not, I don't know. Okay, I don't know. Okay, so you decide for yourself. Okay, all right. Microsoft, I don't touch Microsoft, okay? Yeah. Because trade other things. So if you find value in today's sharing session, okay, can you just type value in the comments, okay, or type letter V so that I know that you enjoy the sharing today. You think that it is of usefulness to you and such lah. So I really appreciate that if you can engage with me and give me a like, share, and comments, okay, so that in the future, okay, Facebook or YouTube will actually let you know again. All right, so if you enjoy this sharing, just type letter V. So if you like it, okay, yeah, I will see you guys again next week. So that's all for tonight. I hope you enjoyed the sharing tonight. So with that, good night, 晚安, and bye-bye.